Why do we invest? Investing can be complicated. It can make people feel nervous. It might cause you to feel anxious if you're not sure about how markets work, how to choose one investment over the other, and all the things that get thrown at us every day in terms of advice from the media, from social media, from our friends. It can all feel overwhelming. And it might make you wonder, why do I even bother with this? My name is Mark Walhout. I run an investment firm called Walhout Financial. In this short video, I'm going to talk about what I believe is the real number one reason why we invest, why we take our money and we invest it into assets that we hope are going to give us a return on our investment over the long run. And what I'm going to do is I'm going to share my screen with you, and I'm going to share this slide. And this really strikes at the heart of what I think is the real reason why we need to invest. And it's because as time wears on, the money that we have today is going to be able to buy for us less things than what they're able to buy today. The value of our money is going to go down as time wears on. And in this example, you can see just using a very simple, product, milk, a carton of milk. If you were to buy a carton of milk in 1916, that quart of milk would have cost you 9 cents. But today, or excuse me, if you fast forward to 1966, that same 9 cents only buys you one glass of milk. And if you fast forward to 2017, that same 9 cents only gets you 7 teaspoons of milk. So using a simple example, you can see how as time wears on, inflation starts to eat away at the purchasing power of our dollars. So the answer of why do we invest? Well, we want to make sure that the money that we have today that we can put away for the future, at very least maintains its purchasing power. And the big irony for people that see themselves as being conservative investors is that the more conservative you are with your money in terms of just keeping it in your bank account, the higher long range risks that you're taking that your money's not going to keep up with inflation, that you're going to have this scenario where not just milk, but other things you need to live on, especially when you're retired, you're going to have a hard time buying the same amount if inflation's eating away at your dollars. So that brings up the natural question, like what types of assets are out there that can allow your dollars to keep up with inflation if they're invested properly over the long run? So in the second chart, I've got some different asset classes going back to 1926, and these are U.S. examples, but I still think that that it's a good point of comparison for Canada. So if you look at that, the bottom line here, inflation. So $1 in 1926, it would take $15 to replace $1 of goods in that value in 1926. So inflation has gone up, 15 times since 1926. So what types of assets could you invest in that would have kept up with that inflation over that time? Well, treasury bills would have kept up with inflation since 1926. So a dollar invested in treasury bills would have kept up with inflation, and then a little bit since then. And treasury bills are really just short-term, high-quality government bonds, very short-term, so less than 1 year. You also could have invested in long-term government bonds. So you would have taken a little bit more volatility, and you can see throughout the example that as I kind of go up the ladder here, the bumpiness of each of these different asset classes starts to rise, or bumpiness is the word I like to use for volatility. So if you've taken a little bit more volatility or been willing to sit through some more volatility, you could have kept up with inflation by owning long-term government bonds. The third asset class is you could have invested in stocks. So large cap or large U.S. stocks, a dollar invested in large U.S. stocks going back to 1926 is now worth over $10,000 today. So you far exceeded inflation, but you also had to sit through some much more severe volatility in order to realize those returns. And then finally, small cap stocks have returned more than large cap stocks since 1926 and more than kept up with inflation. But again, you've had to endure some more significant volatility in order to get those returns. So that to me is really the main reason why we invest and why I like investing in stocks and bonds, or I like to point to them as like a good place to put your money for the long run, because you don't have to sit there and actively manage it like a business. It sits there and it grows on its own. But in terms of the reason why we're doing it, it's really meant to keep up with inflation, so that eventually when we retire, that the money we have in our hands now is not worth less, so that we're able to buy the same things that we need to in future dollars when inflation sort of made those dollars worth less. So hopefully you found this video helpful. If you liked the video, give it a thumbs up, and I will speak with you next time. Take care.